Now, Asian markets were mixed today, with earlier gains erased by continuing concerns on trade wars. Traders started the day on an upbeat note, tracking their New York and European counterparts following recent painful losses. The gains came as data on Friday showed that while the U.S. economy saw a slowdown in jobs creation in July, the pace of hiring remained strong over the past 3 months. The Japanese market closed down, with the Nikkei share average down 0.1% at 22,507. Hong Kong stocks closed up, with the Hang Seng Index up 0.5% at 27,820. Mainland Chinese stocks got hit hard. The Shanghai Composite Index declined by 1.3%, 2,705. U.S. stocks advanced last Friday as upbeat earnings helped investors shrug off heightened trade anxieties and weaker than expected July jobs growth. For the week, the S&P 500 and Nasdaq posted gains, while the Dow was essentially flat. On the day, the Dow Jones Industrial Average rose 0.5%, 25,462. The S&P 500 gained 0.5%, while the Nasdaq Composite Index added 0.1%. For more on the markets, we cross to the Johannesburg Stock Exchange. Arabile Gumede is standing by. Good afternoon, Arabile. How are the markets performing today?
Yeah, good afternoon, Zinga. Well, it is a red market day today, around 0.33% lower at this point in time. A lot coming through as well from the Asian side of things. Tencent seemingly rallying as well today, but not enough to push the market locally up, even though Naspers is as well up. A lot more happening as well on the results front. We saw the likes of Absa as well as Royal Bafokeng Platinum. A lot more to come as well for the remainder of the week, and we'll unpack that. And also a key distinction there with the Rand also losing out a little bit today. But let's check in on how the local and international markets are doing right now. As you can clearly tell, a lot of red there on those boards as well, with the Rand even headed down to 13 Rand and 42 cents. Gary Boyson's portfolio manager at Ranswest joining me. Gary, thank you so much for the time. A drawdown in the all share today, around 0.33%, still below 60,000 points. Do we get to that mark? And what's pushing this market flow just a little bit weaker today?
I'm sure we'll get to that point eventually, but maybe not anytime soon. So we're seeing a little bit of a recovery, as you said, in Tencent, which obviously feeds into the price of Naspers. But I think the issue has been that with the fall in Tencent, the gap between Naspers and Tencent has actually increased. So Naspers has actually performed slightly better on the way down than the Tencent underlying stocks. So we are seeing it up slightly. Tencent was up about 1%. Naspers not quite making up that as much ground. On the positive side, we're seeing some of the Rand hedge counters come into place. We're seeing the likes of Richmond up higher. We also got a profit warning out of Spire Healthcare in the UK, which is an investment from Mediclinic. So we're seeing Mediclinic really bringing up the downside down. It was over 3% when I left the office. Spire shares down over 20% at the moment. So a little bit of corporate news there, but really I think a little bit of optimism feeding through. Obviously we had the jobs number out missing slightly, but we've still had a very, very positive US earnings season. So we've had just over 400 of the S&P 500 companies reporting. 85% of them have beat expectations. So I think a little bit of positivity feeding through from the US market and helping to stave off any real sell-off today.
$1 trillion. That's Apple right now. That's the market cap of that's absolutely phenomenally huge. Surely that is a mark that highlights as well that the tech sector is certainly where you should be.
Can't argue with the performance over the last little bit. If you look at the US tech companies and the FANG stock specifically, the performance has been absolutely spectacular. And even with Apple being valued at $1 trillion, if you look at it in terms of the earnings that the company is managing to deliver, it's still not particularly expensive, which is just absolutely mind-blowing.
Yeah, so it's possibly could go even higher than that, right? But would you say that US earnings in themselves are doing better despite Trump and not necessarily because of Trump. We've got this entire trade issue, which is obviously an issue all on its own, but seemingly everybody just seems to be doing well.
See, you look at it again, we've got to remember that those tax cuts are still feeding into the system. So that was an enormous stimulus, the corporate tax cuts that Trump did push through. So that in a way is helping to buoy the US markets. And many of the tariffs that are being implemented, those effects are going to be mainly felt through second round effects further down the line. So perhaps not quite seeing it in the share prices, and also a lot of uncertainty around how far this potential trade war could go, and also very difficult to price in a worst case scenario. So I think markets may be a little bit complacent in the US around a trade war, because certainly, I mean, if we look at the figures that have been released by some of the big banks, I'm thinking of the JP Morgan report that was released, a significant amount of value could potentially be wiped off the US market. They were talking about just headline earnings numbers on average coming down around 14%. Should we see broad-based tariffs going through and a real subduing of international trade?
Yeah, HSBC also coming out with returns with their interims as well today, 4.6% pre-tax profit on that front. But locally, if we take a look at the big bank ABSA coming out with their numbers as well, profit not looking so great, but still managing to tick up the right boxes when it comes to revenue. A dividend up also around 3% or so, somewhere there. They just keep on trudging along.
So looking at ABSA, I think it was slightly better than expectations. The market wasn't looking for too much in the results, and we saw very flat revenue generation. So the top line was a little bit subdued, and I think that anyone that's been looking at the growth numbers coming out of South Africa recently would be expecting this. Banks are very much a GDP growth play, and yet they did manage to eke out a little bit more than the market was expecting. Looking at consensus, looking at a couple of the big bank sell-side reports as well, it was slightly better. It seems the performance is really coming from the corporate investment banking unit as well as the rest of Africa. So South Africa a little bit subdued, especially in terms of the retail.
Do you trust them in the rest of Africa business now?
It's certainly a different business proposition now that they've had the change with the parent group Barclays and the rebranding of ABSA, the new logo and all of that, which seems to be mixed reviews around that. But again, if you look at what's coming out later in the week, the headline earnings, normalized headline earnings for ABSA up around 3%. We've had a trading statement out from Nedbank, which is coming out tomorrow. We're looking at earnings between, I think it's 23% and 28% higher. Now, if you look at their rest of Africa strategy, really focusing on EcoBank and the market expecting very, very good things from EcoBank. So, if you're looking at kind of the race for Africa, I think my money's probably going to be on Nedbank at the moment.
Sure. Quite interesting on that one. The Rand as well, let's quickly touch on that. A 12% fall thus far, around 1% lost. What's moving the Rand in this direction now?
Again, very, very difficult to tell what is moving the Rand. So initially last Wednesday we did see a knee-jerk reaction on the back of the announcement from the ANC around the potential tweaks to the Constitution. So a little bit of local factors playing a role, but that movement was subdued. There we saw 13.10 moving up to about 13.30. I think probably far more important is the international factors that are driving it, and that's again the non-farm payrolls on Friday, very, very important. We also saw China increasing the reserve requirement for holding yuan trades as well. That also, I think, feeding into emerging market currency sentiment as well, just China making it more expensive to short currency yuan at least. So I think all of that playing a role in the emerging market, developed market trade, which the Rand essentially is a proxy for, because of the liquidity of the Rand, because of traders' ability to use the Rand to take a punt on emerging markets. Any sort of risk off, risk on sentiment, it feeds into the Rand very, very quickly. And I think that's probably why you're seeing the move out that we're seeing this morning.
Yeah, around 13 Rand and 43 cents. That's for $1 US, 15.50 for a euro, and around 17 Rand and 38 Rand or so for a British pound. It's just under $7,000 US for a single Bitcoin. The market in the red for now. Can it get to a point where it trickles higher by the end of close of trade today, rather, is something we'll keenly be watching. Of course, manufacturing data as well expected out later this week. And as Gary said, Nedbank, MTN also expected to come out with results for the remainder of this week. So a key results week indeed, despite the Thursday public holiday. That's a look at your markets. Nompumelelo and Nzinga coming up right after this.